Hi, do you remember this time last year? We were all worried. Remember 2022? Remember the high inflation rate? Central Bank of India raising interest rate again and again. And almost everybody was convinced that 2023 would be a year of recession in the Western world. And this was the fear with which we entered this year. Now that this year is also coming to an end, let's look back and take stock of what Indian economy did in the 2023. So if you are interested to know what happened with all of us, let's talk economics. So there are multiple ways of looking at a country's economy. But if you want to know the health of a typical economy, there are few macroeconomic variables that you can look into. And today we are going to talk about three of them through which we will try to gauge the health of Indian economy. Inflation, unemployment and growth. So first, let's talk about the elephant in the room of last year, inflation. Remember the pandemic and the stimulus which central bank all around the world infused into the economy? That led to a massive supply of money in the global economy, and over the period of time that led to inflation. It was looking pretty bad last year. Even though India was not the country which had the highest level of inflation, it was a concern, especially given the developing nature of our economy. So that was a concern, and central bank was trying to fight it with all its rigor. Remember the multiple interest rate hikes that central bank took one after another? Coming into 2023, we were still worried. Even if the pandemic seemed to be behind us, the war in Russia and the subsequent shock to global oil supply had us deeply worried. Now let us talk about growth. Even if in 2023 Indian economy had registered a strong growth, we knew it was coming on a very low base of 2021. So we were worried if this growth was sustainable and if we will grow handsomely in 2023. Now let's come back to unemployment, and the story was similar there also. Millions of people in India were unemployed during COVID. And when the economy started recovering, millions of people got back their job, but there was still a substantial number of people who were looking for jobs. This was the condition, this was the context in which we came into 2023. So how did we do this year? Again, let's start with inflation. Throughout this year, inflation broadly have been in the comfort zone of RBI. You know, the range between 2% to 6%. So that's a big achievement and that's a big plus. And that's the main reason why central bank stopped raising interest rate a while back, and it has kept the interest rate same. And now with lower inflation, expectation is rising of an imminent rate cut in the country. And this happened despite all the churning going on in the Middle East, which could spike inflation significantly for India. So on this front, clearly it has been a good year, better than expected. Let's go to growth. Have you just seen the recent number of Q2? It surprised everybody when the GDP turned out to be growing at 7.6% in Q2. Even though this was slower than the Q2 growth result of last year, remember, which was coming on a low base, this time it surprised everybody on the upside. Analysts were expecting a GDP growth rate between 6 to 7%. Even the RBI had it pegged at 6.5%. So 7.6 is a surprise on the upside. So that's again a good thing. And this is also significant because even though the West didn't have the recession which everyone was predicting, things are tough. You might have heard about multiple layoffs and especially bad condition in Europe. And in spite of all this difficult global economic situation, India's growth is really commendable. Now let's come back to the third one, unemployment. Unemployment has come down compared to last year. But before we start celebrating, remember there is often other side to this story. If we look closely, there are some clear worry signs. So let's start with inflation. Remember, RBI has fixed a range of 2 to 6% within which it is comfortable with the inflation. But the mean is 4, and the intent is to bring back inflation to 4%. And even if this year it has come down in the range between 2 to 6%, the consumer price inflation has not touched 4% since September 2019. And that's clearly not a good sign. And especially the kind of development that's happening in the world around, the conflict in Middle East, the continuing war between Russia and Ukraine, evolving geopolitics, the ongoing tension between China and United States. Together, all of these factors can make it really tough for India to contain inflation, and it might spike if not handled properly. Now let's talk about growth. There are similar worries in this domain as well. Even though the growth rate has been increasing, the component of this growth are really disturbing. Investment is key to sustainable growth. And if you look at the investment in last many years, most of the investment is coming from government and not from private sector. This is often not the best path to sustainable growth. Private investment is crucial, but it has been stagnating for years now, and this is clearly a sign of worry. Even though the government has been doing heavy lifting when it comes to investment for last many months, the much needed crowding in of investment has to come quickly for Indian growth story to continue. And on the job front, even if we have recovered many jobs that we lost during the pandemic, the nature of job is a big concern when it comes to our economy. Even the composition of job market is worrying. Female labor force participation is still very low. Quality of job is also a cause of massive concern for our economy. So all in all, we have clearly seen that even if we did well in 2023 and many of the worst fear did not come true, going forward challenges remain. The task is still cut out for Indian economy. We have to progress on multiple fronts to take our country on a path of sustainable and inclusive development. So it will be interesting to see how we do next year. Until then, keep learning, keep exploring.